please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Continues to be a good start to the week and, of course, the day. Titan really being your stock of the morning, 3% and counting on that one now. But right now, let's continue our conversation on NBFCs and the fact that bond yields have continued to soften. The latest trigger coming in from the RBI, which said that FPI limits will now be increased. Foreign portfolio investors would be allowed to invest up to 5.5% of outstanding stock this year, goes up to 6% next year. Umesh Revankar, MD of Shriram Transport Finance, and Nidhesh Jain, analyst at Investec Capital Services, join in to take this discussion forward. Thank you very much, gentlemen, for being with us. Mr. Revankar, I'll first start with you. You know, we've just been speaking to the auto companies and going through the CV numbers that continue to look so fantastic. What is that going to mean for overall business growth, disbursements growth for you as you're looking at this financial year?
Yeah, the demand for vehicles, especially construction-related vehicles and a certain heavy segment vehicle continues to be very good, and certain geographies it has been more than normal demand, especially in the northern belt. So northern belt, which has been growing quite well. If you look at the last 2 years overall performance, the state's GDP, Bihar, UP and all have been growing beyond state's national average. So that is where the demand is coming from. And most of them are not just replacement, it is the additional demand because of the better economic activity in those belt. So this is impact of last 2-3 years continuous progress in this belt. And I continue to believe that another 2 years we have a very good demand in this belt, because these were the states where demand was much lower in the last 6-7 years. And it is catching up on all India average.
Okay. Good morning, Umesh. Can you just develop on that point? You expect the CV demand to continue to remain strong? I mean, as we get towards election, is there just a fear that construction activity will not be the same pace? Or do you think you have a good thing going? What kind of loan demand would you expect in FY 19?
See, I expect the overall loan demand growth for the industry at around 15%.
Okay. And
the companies who are well established, have a better network, can go beyond it. And we have, from Shriram part of it, we have a very good branch network, around 1,200 branches. And we have been building a lot of network in the north and east in the last 2 years. And we may add another 200 branches in the overall in India. So that makes the growth to really go up, and we expect around 18-20% growth for our company.
Wow. Okay, so I mean, obviously that's great headway as far as this business growth is concerned. Now let's come to margins, sir. And here, I mean, there are certain very favorable movements that have happened in bond yields. What will that mean for your cost of funds and the margin outlook?
See, the bond yields are likely to be in the last year's average. That means our net interest margins should remain at last year's level. I don't think there will be a further expansion immediately. But if you're able to maintain, because the fear was, as we came to the last quarter in the last financial year, the fear was the margins are likely to come down because of bond yield going up. Now that fear is not there, and sure that net interest margins can be at last year's level. And that gives us enough opportunity and scope to maintain the profit growth beyond the AUM growth.
Okay. Just coming back to you in a minute, Umesh, let me also invite Nidhesh Jain into this conversation. Nidhesh, I don't know if you heard Dinanath of L&T Finance, who was also speaking to us a couple of minutes back. And here's Umesh also telling us that loan growth could be 18-20% and margins will be maintained. Your hierarchy in this, do you prefer consumer financiers? Do you prefer rural financiers, CV financiers? What's your hierarchy?
Our preference has always been housing finance companies, where we have seen very secular growth over last many years. While if you look at both rural financiers as well as vehicle financiers, the growth have been cyclical, asset quality have been cyclical. And right now, over a short-term period, the growth environment as well as asset quality environments looks to be extremely good for vehicle finance. But from a medium to long-term perspective, we continue to prefer housing finance companies.
Okay, so your picks in the space are?
So in the housing finance space, we prefer PNB Housing Finance and HDFC Limited, which are our preferred pick in the segment.
Okay.
In the vehicle finance, our preferred pick is Cholamandalam Finance and Shriram Transport Finance.
Okay. All right, Umesh, to come back to you, what's the issue with NPAs? Do you think you'll be able to bring them down substantially from these 8% levels?
See, we are moving to 90 days in this quarter, and as we had given guidance earlier, there could be 100 to 150 basis point on the gross NPA level. But going forward, yes, now the weather indication, especially first indicator of weather forecasting is been normal by the SkyMet. I think if that is the case, then there is a good opportunity for us in the first 2 or 3 quarters to bring down the NPA level by another 40-50 basis points from the peak, because we are going to peak when we move to 90 days, and from that level it is possible to bring it down. And as far as credit cost is concerned, it already is declining in the last 2 quarters, and it is likely to decline further in the next 2 quarters.
Okay. What about you, Nidhesh? In fact, there are actually fears that in housing finance, people are moving towards more non-salaried, disbursements. As well, of course, there's ever present fear of more LAP financing. Don't they concern you, and therefore would you not look at non-housing as a preferred option?
Yeah, so if you look at the housing finance space, in last 3 to 4 years, we have seen entry of multiple players in the housing finance space. But most of these players have been entering into affordable housing segment, where the yields are higher, where you work on assessed income. While if you look at the top-end salaried documented income segment, formal segment, there has not been much of a new entrant coming into the segment. So we continue to see the demand environment quite strong in the formal segment end of the housing finance space, with a very low probability of asset quality deterioration. The margins are under severe pressure in that segment, but margins continue to remain pretty low in that segment, and at those low margins, companies like HDFC have been able to report 20% sort of ROEs. Companies like PNB Housing Finance has been able to report 15-16% ROE. So we don't see erosion in these sort of return ratios, while in the affordable housing finance segment, where we have seen multiple players entering, there will be sharp erosion in their yields as well as ROEs, both on account of competition as well as asset quality deterioration.
Fair point.
So we are not worried about asset quality deterioration in the formal segment, and hence PNB Housing and HDFC Limited continues to be a top pick.
All right, we'll leave it at that. It's a divided house here, but Nidhesh continuing to prefer housing finance, but strong at least guidance coming in both from Shriram Transport and L&T Finance. Gentlemen, thank you very much for speaking to us and laying down the terrain of NBFCs. It looks like a happy year ahead, especially if the monsoons oblige. But it's definitely a happy day for weather, for both mid-cap and for large caps.
Oh, yes. And I tell you something, Lata, as we discussed in the morning as well, I think the Bank Nifty has got its mojo back. And that one is seeing about 140-point rally. And despite ICICI Bank actually not, doing too well. But Ashwini and Nidhesh back with us. Prakash Gaba also joins us. Ashwini, you said in the morning to go long. You staying with that trade? Do you think this is turning out to be a mini trend day, if not a big trend day?
I think it is looking like the narrow range of Friday is breaking out. And my sense is ICICI Bank will recover by the end of the day. So whatever day you are having is likely to get larger. So having held on to Friday's high, chances are that there will be continuation, particularly, Bank Nifty. I said on Friday, retail and corporate, if they start firing together, then, it provides a lot of strength to the Bank Nifty as well as to the market. I think market will pick up from here. What's interesting today is HDFC Bank and HDFC have started performing since morning. Generally, you see that both these stocks start to come off because, you have FPI selling, etc. That seems to be changing. So HDFC Bank is a buy with a stop of 1915, target of 1975. Maruti is a buy with a stop of 9200, target of 9550. And also HDFC is a buy with a stop of 1825, target of 1875.
Okay, so Ashwini, for the longs, what would be the stop loss for the day?
I think we will not hit lows of the day. So even Friday's high can be used as a stop, because what you want to do is trail your profits higher.
Actually, metals have got their mojo back. Mitesh, any thoughts on Hindalco, Nalco? It's the aluminum stocks that are doing very well. And plus, of course, your thoughts, your strategies.
Look, I think Hindalco, we had a buy call last week, and Nalco, I think, is today giving a fresh breakout. So I think it's heading towards those levels of around 78, 80. Not a big upside, but from a trading point of view, I think a 8-9% kind of move looks very likely over here. Coming to my stock picks right now, I have a buy on Kotak Bank with a stop at 11.17. Look for 11.70, 75 kind of a target. And Asian Paints is a buy as well. Keep a stop below 11.37. Look for 11.80 as the target.
Okay, the futures premium is building up, by the way, both on the Nifty and Bank Nifty. If you see that, normally is an indication of big buying, at least in the future space. Prakash Gaba is also with us. Prakash, good morning. Your trades?
Good morning to you. To me, Nifty, like I said on Friday, the target is 10,418. I think it's heading there. I have two buys here. Looks like Hindalco is a buy. Can climb to around 230 plus zones, stop below 215. I also like Balkrishna Industries. I think it's heading to levels closer to 1280 zones, stop below 1230. What we saw on Thursday was a directional move.
Okay, and GMR has come out of nowhere and performed. I mean, we are talking about a very small denomination stock, but nevertheless, the month has been good. April has been kind to them. Ashwini, is there a trade here? I mean, just an intraday or a short-term trade? Okay, I don't think we're able to get Ashwini at this point in time. I'll pass this to Mitesh. Mitesh, have you looked at that chart? GMR Infra.
Yes, in fact, I think on Friday, the stock has had some kind of a very strong candlestick pattern above the 200-day average. And today we are seeing some indicators also cross positively. I think it's heading towards levels of around 22.5, 23, so roughly about 10% kind of an upside. And I think I would basically not buy immediately, but buy part quantity right now in case you get a mild decline to about levels of 19.5, 19.25. I think that's the range to buy more, and keep a stop below 18.80, and 23 should be a positional target. So I think this is a 3 to 3.5 week kind of a trade.
Okay, Ashwini, for those who missed out the first hour, what would be a right entry point? Obviously, you can't buy now with this kind of move.
See, I don't think it's worth trying to chase now. You have to buy in the morning. If you missed out, go back to sleep.
All right, gentlemen, thank you very much for joining us. And that's Lemon Tree actually listing at a good 12% premium. Probably a little better than expectation, Lemon Tree. That's 56 rupee offer price. And not a bad listing, you will have to say. It's a over 1,000 crore IPO. And well,
I think the market mood may have helped, Lata, because obviously, and there's nothing for retail in this IPO. Technically, it was an offer for sale for some existing investors to, get an exit. But 8% higher is what we have on this one. Quite interesting.
Yeah, and it was not a slightly pricey IPO compared to, of course, the peer group. But nevertheless, it's done well. And yes, as Anuj says, it's got the good fortune of also listing on a day when both mid-caps and... well, we are going to continue our finance companies conversation. But before that, the commodity markets have opened. And that's an important set of cues to understand. Manisha Gupta joins us. Good morning, Manisha. What's the early trend?
Morning, Lata. Thank you for that. Well, we have seen some strength come back in case of the crude oil prices. The previous week wasn't good. Remember, we saw 2% decline on Friday. The previous week closed 4.5% on the lower side. But we are finding some buying support at this point in the Asian markets. It is to do with this weakness in US dollar. You also have seen a decline in US inventories. And apart from that, a bit of a risk appetite that's come back in the global equity market seems to be supportive as well. The gold and silver prices in the meanwhile have seen some divergent moves here. Gold, of course, has been under pressure, but there is good buying coming in for silver prices for a third straight day. There have been reports out in the international markets on the deficit expected for the rest of 2018 and how the demand is seen improving from the solar industry, smartphone industry, and also EVs, etc. And that seems to be supporting a bit at this point in time for that commodity. The metals as a space also has been quite volatile. We have seen the iron ore prices in Shanghai decline to a 10-week lows, and that has pulled the zinc and the nickel prices on the weaker side. So whether it's in Shanghai or on LME, you have seen 1 to 2% of a cut coming in for that one. A bit of a green that we saw in aluminum is after US has proposed sanctions against some Russian businessmen and companies, and Rusal Aluminum also comes under that. Remember, Rusal is one of the biggest aluminum producers, and with the kind of sanctions that the markets are working with, there could be some supplies being hampered, and that in turn has been supportive. So Shanghai has seen 3% gains in aluminum, LME is up nearly 2%, and Indian markets as well trading a percentage point higher. Trading strategies, and we have them from Angel Commodities. They have a couple of calls for us. For silver, they are anticipating a buy with targets of 38,700. They also have a call coming in for the crude oil prices. And copper. Copper is what we put out for you. 442 on the higher side is what they're expecting for that one as well.
Okay.